Okay, so let's look at round two results. We just processed last night. So net profit per team, we see that a general increase in net profits with the same two. We had three companies here with the highest net profit. Now, two of those companies maintained that leadership in net profits, and we had a third company come out of nowhere and take third place in net profits. So that's terrific. But interestingly enough, we had our number two team with 61 million in net profits actually decrease in net profits. Well, that's a big no-no for investors. Investors don't like it when profits go down. They really hate that. So, and then we have two companies sort of at the bottom here that are actually that's weird. Are not making really many much improvements or many profits at all. And we had some companies. If we take this company over here, um, KOM Motors, 17.7 million in round one, and in round two, they shot up to 60 million, a significant increase. Now, any company that gets over 60 million in round two is doing really well, very well in profits. And if we look at points per team, points have gone down. Okay, so let me explain this. Round one is easy to make a lot of points because you're competing with a loser management team that was fired from year zero. So you're starting off, and your baseline of metrics to year over year to improve against is pretty easy because the previous management totally screwed up. So round one is you're establishing your management team, you're making decisions, and it's pretty easy to um, generate some decent points in round one. Now in round two, you're competing against yourself as well as the other computer players, so other team players in the class. So you're competing against the other companies for market share, and you're also competing against yourself to improve your round over round statistics in your overview. Now, some teams were able to, for example, this team IAA Auto or IA Auto. It went from 769 points to 676 points, which is fantastic. And we had again this team, the KO Motors, since they did so well coming up with their profits, their points came really strongly back. Now, remember, we're trying to make. If we look at the points we're trying to earn for this team, we want to get a total of 2,600 points to get the full score in this simulation. I'm sorry, we're trying to get 2,500 points to get the full 15 points for this simulation. So that's cumulative. So after every round, that keeps adding up. So so if you have a team like this here that made 769, so so they've made about almost 1,500 points, only 1,000 points to go, and you have four more rounds to do that. So you have to make 250 points per round moving forward. So that's how you can kind of look at it. Now, the average points per round is generally 400. So if you do 400 times 6, you get 2,400 points. That's just the average score. So I'm asking you to do just a little bit above average um, in the simulation. Now, the nice thing about this simulation is that that 2,500 point mark is something all teams can achieve in the simulation. Even if you're last place, you could still get over, because I've had plenty of teams get over 3,000 points in the simulation. So I didn't really make I set the bar at 2,500 points, which is sort of just a little bit above average performance in this simulation. So keep that in mind. So don't be too down on yourself if you did very well. It did very well in round one, like 1,100 points. You did the best. Trying to improve upon that, it's sort of like getting an A minus average and then trying to get an A average the next round. So um, some of these points you earned here, it's going to average out. So don't feel too badly that you didn't get 500 points the second round, because it's very difficult to have a very strong round and then have a second very strong round after that. Um, but overall, you're going to make it. You're going to make it to that baseline as long as you are doing everything a company should be doing to improve its profits. Okay, so let's look at stock price. We have um, last round we had a couple companies here with the highest stock price, but now we have a top three. We have LG Motors, Sim Car Company, and I don't know how to pronounce that, but all over $35 per share, which is great. And then we have pretty much everybody else in this general area. And we had, I think this team had the biggest improvement from, which we talked about before, KOM Motors from 8.9, and they had the steepest slope, and now they're at 22. So really good performance in stock price by them. But you see how just about everybody increased in stock price except for this team down here. Didn't do so well. Uh, and the reason this team didn't do so well is that they forgot to enter any information in their company, and they were forced forward, so they didn't really have a chance to change any of their inputs or make any inputs. Okay, so if we look at sales per team, look at this company, and that KOM Motors really turned their ship around. They went from 130 million up to, here they are, 307 million. So they really, I'm going to say, I'm guessing here, they watched my video last week. They really understood what I was trying to say, and they turned their ship around. And they really improved their company, which is great. Um, so we have a couple companies here in top, Delaney and Fides Auto, Butter, and LG Motors all have very high sales. Any sales over 300 million is doing significantly well, and you see the majority of classes over 300 million is where you want to be. If you're down here below 300 million, really assess your forecasting and do some work in an area to try and improve that. Okay, earnings per share. So this is the company that I said was forced forward. They didn't really have a chance to improve anything. They missed the round deadline, but again, we see this huge increase for KO Motors, and then we have a new leader in earnings per share, and that's Sim Car Company, followed by LG Motors, and then I don't even want to try to pronounce that, but that's a cool name. All over $8 per share in earnings per share, which is doing really great. And we see a lot of company. Here's another company here. This company, IA Auto, which you saw did very well in points also. They had a huge increase in their earnings per share, as did Epic Motors. Really big increases. And then there's another company here, Baron Motor. So a lot of companies, they really did figure out the key to increasing their earnings. Only one company decreased earnings, and that was General Motors went down in earnings here. So then you look into that a little bit more closely. Okay, so this is just the total composite there. All right, so if we look at the leaderboard here, we see that points are ranging from 676 as the highest, and that's a 93 percentile rank, which is really good. So I have, two companies over 90% in round two. And then a lot of companies, sort of a sophomore slump, as we call it, in round two. It can get difficult to make a lot of points. Now, profit margins should be in the 50s in round two. And only we have about six teams here in the 50s, and everybody else is kind of in the 40s. By round three, every team should be in the 50s or higher. And then any teams here, these teams here, we started at 40% in round zero. So these teams here, after 2 years, have done nothing to improve their profit margins, and this is why you're lagging behind. You have to get these profit margins up. How do you do that, Professor Nugent? Oh, well, student, it's very easy. You raise prices or you lower costs, or you become more efficient, which helps to lower costs, and that's how you increase prices. Well, why is it important to increase your profit margins? Well, because that's what your investors expect. You're trying to maximize shareholders' wealth, and the strategy for all companies is how do you maximize shareholders' wealth, both in the short term and long term. And that's why if you don't do that, your stock gets punished, your year-over-year credentials and analysis gets punished. You really have to do that. So after this video, there's really no excuse for not having this above 40, other than you're not watching any of the videos that for this online course, which is sad, makes me want to cry. Okay, so stock price, and we talked about this before. We have a number of companies. If you're over $30 in stock price, you're doing really well. Even if you're over, I would say just being over $24 in stock price, you're above. Even $23 in stock price, you're above the average for the class. Um, Now, take a good focus. Okay, so total points. You see how the points are higher because we're adding rounds 1 to 2. They're cumulative. That's how this company here, you're only have 1,000 points to go to get to the 2,500. So you got 4 rounds to do that. So you're, pretty much there. Everybody else is still in the game though. Even if you're down here in like the 300, 600 range, still very easy to make the 2,500 points. You just have to turn your ship around. So operating profit margin is what the key consideration here is. Don't over advertise. You don't want to under advertise, but if you see that you're generating demand much higher than what you're producing, you may be over advertising and wasting operational profits. Earnings per share, it's your net profits divided by your outstanding shares. So if you should be, when you want to buy back some stock to lower the amount of outstanding shares. That will help your earnings per share score as well, which I talked about last round. Now, pay particular attention to your assets. You don't want to over um, purchase assets like factories you don't need, because return on assets is a significant consideration. We're looking at net profits to assets, so you want to make sure that your profits are growing as fast as your assets. In addition to that, of course, we have our net profit margin, which is really interest and taxes. So you can also help your net profit margin by, at a certain point when you start making money, probably around round 4, you want to start lowering your debt, and then also help your net profit margin. Um, so let's just look at, TAT, total asset turnover. So this is how your assets generate sales. So you want to make sure your assets are as efficient as possible. And one way to do that is to have a high capacity utilization on your factories. And that will give you better asset utilization and better asset turnover, turning your assets into sales. Okay, so let me go into, here's my demo for round 2. So you guys just finished round 2. This is what I would have done going in from round 2, doing the round 2 decisions. This is the process. Think about this for round 3. So first I'd analyze my overview points, and I say, okay, 57 gross profit, 39 operational, net 27. My revenues, I look at all the factors I had a deficit, that's bad, and I made 922 points. So I need to improve upon that. So I could check out my assessment, see my assessment scores, read the advice, check out my charts, most specifically my performance chart, to see what is the bottom chart's the most important. What is my actual so here I under forecasted, and here I met my demand, maybe I over forecasted. So that means I would go in and see my projection real quick and say, yep, I over forecasted and had unexpected inventory, which led to unexpected deficit. So I don't want to make that mistake again. So I go back into my cars and I see I have my operational cost reduction here to help me. So I'm going to go and I'm going to manufacture my cars. And I can see engine power really is important for the economy vehicle. So let me just go below the expectations on that. So I'll build my car here, and I'll see that I only have a 3% gross profit margin. Okay, that's because I had put too much money here. Oh, that's better. So, and I could actually increase my price a little bit here. So now 47% isn't better than where I left off on my profit margin. So you remember here, my profit margin left off at 57%. So that's not better. So I'm just going to adjust some variables here. Oh, can't do that. Okay, so with the economy class car, it's really difficult to get over that profit margin because I guess I didn't make enough operational investments last time. So I'm going to make the sedan now, and I'm just kind of meeting that mark here. Let's see. And the reason I do this after you guys do your round is because people that just start copying my inputs, and I don't want you to copy my inputs or sales forecast because I'm not really, as you can see, I'm not putting a terrific amount of time into doing this. And and that could be a problem for me in my performance. Okay, so I'm going to really rely on my luxury vehicle. That's luxury vehicle. I've got over the 50. Um, I forgot already what I'm shooting for. Here is 57% gross profit margin. So I failed to do that on. Didn't do that here. Didn't do that here. I get 55. So luxury is the only place I really was able to. So I'm going to have to make a vehicle. Okay, so I got this up to 58, 59. So I'm going to have to. My vehicles are basically going to be crappy. Uh, to try to get those percentages above. So, and that's going to hurt my sales. So I got to factor that in when I'm doing my sales here. So I'm not going to have a great round because I think the problem is I didn't do enough operational investments to reduce my costs. Okay, so now I'm in the marketing page. I'm going to this takes a while, so I'm going to pause this. I don't want to keep you hanging, waste your time while I fill out my marketing. But I see that the ranges went up now. So marketing is getting a little bit more competitive, and that's because the industry is growing. So you're going to see that this marketing increases every round. Okay, so I'm in round 2 here, and I need to buy just one factory, or maybe, let's see, I definitely need a factory here. I need a factory here. So I'm trying to match my forecast to my capacity. So actually, these two. Actually, I have a lot of inventory here. So if I don't buy anything, let's see what happens here. Yes, I actually can get away because of my leftover inventory. That's going to help my assets be a little bit more effective this round. So I only really have to buy one factory, which is going to make my assets a little bit more. My capacity utilization is going to go up. So that's what I don't expect you to fill out the reflective observations, but these are good things to read. They do help you focus on what you should be doing. So let me just see here. Let me just submit my production. All right. So this is sales forecast. What's it saying here? Oh, luxury class. Okay, so give me a warning. Yeah, I do need a plan for luxury. That's what's nice about the simulation. It gives me little hints of when I make bad decisions. So did need 2 factories. Whoops. Okay, so I want to go to the finance page first and see how much money do I have. I have 82 surplus of 82 million, which is pretty nice. So what I'm going to do is go back to production, and I have some funds. I want to invest it in, and I'm not doing any strategy here because I don't want to really. Okay, total investment. So let me just up my operational investments and see what my total. Okay, so I come back down here, 15 million. I think that's a big enough surplus to handle any. Actually, let me. I want to put 8 million towards my buy back some stock to help my earnings per share. So you can see here. Let me just. My earnings per share here is $10 with a stock price of 42. That's estimated pro forma. If I buy back 8 million shares of stock, you see my stock price and earnings per share go up. Now, because the pro forma financial statement, this sales amount is based on my forecast. So this may not actually happen. If I don't sell everything I forecasted, my pro forma won't come true because this is a guess of what's going to happen based on my sales forecast. So even though I have a $7 million surplus here, if I have any unsold cars, I could wind up with a deficit. So I'm taking a chance. Let's see what happens. I'm going to process round 2. And now I'm in line with you guys. I'm in round 3, like the rest of the class. And let's see my points. And now I had a deficit, so I guess I should really have a bigger surplus. And I only got 252 points. Now, if this wasn't a deficit, I would have had an extra 200 points here of 454, which would have been pretty good. So I was able to increase my profit margin. My profit margins went up on gross, but they stayed flat in operational and net because advertising budget went up. So I wasn't able to really improve my operational or my net. So that kind of was flat, and a lot of my categories were flat. And my asset turnover, since I actually had a low capacity utilization on a luxury plan. I bought a whole plant just to make 300 cars, hurt my assets. So, and it looks like if we look at my production, do I have any? Yep, and I had unsold inventory on my because my economy class car was so terrible to try to make that profit margin. I didn't really sell as much, and I didn't really put any much attention in how what I was forecasting. I just threw a number in there, which is you guys can do be a little bit more accurate with that. So, like you, I had a more difficult time in round two, but that's okay. I'm setting my company up to do very well in future rounds because I made those operational investments. I tripled my cost reduction on my operational investment, so now I should be able to make going into round three even more profitable cars. Okay, so that's about my 20-minute review of round two results and some suggestions of how to improve your gameplay moving into round three. So best of luck. Thank you.